Hello clients and friends. This is Dennis Goodman with Bowmel & Goodman Financial Strategies, and it's my pleasure to present our economic and market update. Springtime is here, a time for renewal and optimism as we make our way out of this challenging year of COVID pandemic. This year, springtime is also a year of transition for Bowmel & Goodman as we made the decision to change our broker-dealer affiliation to Genios Wealth Management. Genios is an independent broker-dealer headquartered in Denver, Colorado that provides concierge-level services to some of the most successful and highly qualified representatives in the industry. This firm has supported financial advisors for decades, helping to protect and grow their clients' wealth. They're very selective in who they affiliate with, and we're proud to be able to join that select list of advisors. We're confident that you'll be pleased with them as our new broker-dealer. Also, we want to thank all of our clients for taking the time to help us complete the transition, whether it's through meeting in our office to sign new account documents or completing them online electronically. We're still working to complete the transfer of all of our client accounts and should have that completed soon. One of the most exciting parts of this transition is our partnering with two outstanding young advisors, Rob and Davey Arthur, to help provide for our client needs both now and well into the future. Rob Arthur has been an investment advisor for over 8 years. He earned a BA in Agriculture Economics in 2009 from Virginia Tech, and he's also attended graduate courses in local government management. He's currently on the Board of Zoning Appeals in Roanoke County. Rob's also an experienced investor in real estate and rental properties, and he and his wife Lauren have 3 beautiful children, and they enjoy running their small farm on the side, teaching their children the importance of hard work and sustainability. Davey Arthur has been an investment advisor for 7 years, with the past 6 years at Genios and IFA Wealth. He earned his Bachelor's of Business Administration in 2006 from East Tennessee State University. And prior to entering the finance world, he was Vice President in charge of operations for Mattress Depot with 6 locations throughout Southwest Virginia. Davey and his wife, Amanda, are both from the Roanoke Valley and now live in the Grandin Village area with their 2 sons, Luke and Hugo. When he's not at a soccer field or coaching baseball, Davey enjoys canoeing, hiking, camping in the Blue Ridge Mountains and beyond.
Rob and I are excited to be joining forces with Dennis and Walter as we strive to carry on the legacy of service excellence established by the team at Bowmel & Goodman.
We look forward to getting to know all the members of the Bowmel & Goodman family of clients, and it's our goal to continue to provide you with the client experience you have come to expect.
Today's agenda is very straightforward. First, I'll share with you a brief economic and market update, and then we'll discuss some proactive guidance for moving forward. Remember, there are 5 key areas of financial planning that include preservation planning, retirement planning, tax planning, estate planning, and investment planning. And we try to always consider the impact of any recommendation we make on not just one, but all of these areas for our clients. That said, today's presentation will primarily be focused on investment planning and equity markets. At our firm, we partner with our clients, and we believe an educated client is our best client. Now, while we try to always do our best to help you when it comes to your finances, we believe that knowledge is power. So one of our missions is to share with clients any knowledge that can help them make an informed decision. Looking back to the start of 2020, investors have had a most unusual ride. On February 19th of 2020, the S&P 500 index closed at a then all-time high. And then without warning, when the COVID first became a worldwide pandemic, investors saw a 30-plus day decline of over 33%, which finally reached a bottom on March 23rd of 2020. Good news arrived on the scene 5 months later on August 18th as the S&P index rallied to a new all-time high. If you fast forward to late April of this year, the index, despite all the volatility, again made new highs. Interest rates continue to be in the forefront of our watch list. With vaccinations being distributed and the economy on the rebound, the Federal Reserve offered an improved economic forecast during its March 2021 monetary policy meeting. Despite the predicted upward trend in the economy and inflation, the majority of Fed Policy Committee members remain steadfast in their plan to keep the key federal funds rate at or near the 0% rate they moved to in March of 2020. They cited 2024 as the first year they anticipate rate hikes, noting that the Fed needed, quote, substantial further progress, end of quote, toward employment numbers and price stability before they could raise rates. Now, safety comes with a cost. Have you seen what interest rates banks are currently offering to savers? According to Barron's, the average bank money market rates on April 19th of this year were 0.07%, and the average 12-month CD rate was a whopping 0.18%. Now, as a sidebar, at a rate of 0.18% without taxes, it would take over 350 years to double your money. For many investors, today's low rates might not help them reach their goals. Therefore, equities could be a part of your diversified portfolio. This past quarter brought investors many tempting distractions. Media magnification is as powerful as ever. Sensational headlines can leave investors somewhat overwhelmed, stressed, and confused. Our objective is to help you carefully create and follow a strategy with realistic financial goals. Veering off course in the hopes of short-term gains could potentially compromise the financial fortitude of your long-term goals. Call us if you have any questions about your path, and please contact us before making any sudden moves. Also, your personal health is imperative, and stress doesn't help. So let's all try to stay healthy. An essential factor when selecting the types of investments to include in your portfolio is your time horizon. This is the amount of time you earmark to reach your goals. An investor that can commit to a 10-year time horizon can review different choices as compared to someone who needs to use that money in, say, 6 months. Investors should always try to match their portfolios to their goals and time horizons. This can help them keep the big picture in mind and hopefully curtail any distractions caused by short-term developments. This is something that we enjoy helping our clients with. If clients are focused on their long-term goals, we can help manage any anxieties caused by short-term market noise or volatility. Our goal is to help clients avoid making impulsive investing decisions. Another key investment factor that you can control is your risk appetite, or the amount of acceptance that you have for risk. Now, we want to emphasize the importance of keeping your focus on what you can control versus what you cannot. As this illustration shares, you can control your risk, your time horizon, and your behavior. But many investors focus, though, on outcome or investment return, which is something you cannot control. Reviewing your risk appetite to see if it's shifted or checking to see if your time horizon has changed is always important. And after you fully outline or update these two foundations for your investment strategy, you can then match your behavior. Thinking long-term is still a great way to look at equity investments. Typically, the most successful investors think and act for the long term because it's near impossible to predict exact market movements. Equity market volatility is still present. Equity market downturns or declines are a normal part of the investment experience. So now is an excellent time to move forward with confidence in your path that you've chosen towards your investment goals. But remember, equity markets are currently high, and we always alert our clients we need to proceed with caution. On the tax front, recently President Biden said that he was going to recommend some changes to the tax rates and laws. While nothing's currently approved, this is something we'll be watching closely, and we'll keep our clients updated and informed as things progress. The SECURE Act was passed in late 2019, and it changed how retirement funds were transferred to heirs. To try to offer our clients better flexibility on minimizing taxes on their retirement funds, we'll be discussing with clients, where appropriate, strategies that come with designating both primary and contingent beneficiaries. Another proactive topic that we want to be watching is that in March, Senator Bernie Sanders filed a Senate proposal called for the 99.5% Act. This proposal was to reduce estate tax exemptions from the current level of $11.7 million per person down to $3.5 million per person. The estate tax rate under Senator Sanders' plan would start at 45% and grow to as high as 65%. This is a proposal we'll be closely watching, and as things develop, we'll be updating you and talking with clients that could be affected. So as a quick recap, here are some key points. Despite continued volatility, equity markets in 2021 have started on a high note. Interest rates are expected to remain low for the foreseeable future, and the economic recovery is still largely based on vaccine distribution and the reduction of COVID-19 cases. With a new administration brings new changes and proposals, so caution and vigilance are always critical. Please avoid distractions that sway you from your path to your goals. Focus and make sure your time horizon and risk appetite are in line with your goals, and as always, call us with any concerns. Legendary long-term investor Warren Buffett gets lots of ink, but it's his business partner Charlie Munger that said, "It's waiting that helps you as an investor, and a lot of people just can't stand to wait." As you have come to expect, we continue to focus on reviewing the changing landscape for our clients on an ongoing basis and communicating where appropriate with relevant discussions. We're continuously reviewing economic, tax, estate, and investment issues for our clients. And in fact, we'll be offering other workshops that highlight tax changes and planning ideas. We appreciate our clients. As a client benefit, you can add names to our distribution list for viewing this workshop. We hope you'll take advantage of this and add a few names or more to our list. One of our goals for 2021 is to continue to help others. As we've said many times, some of our best clients will refer to us by existing clients. So please feel comfortable letting us know the names of anyone you would feel could benefit from our services or information. Again, one of our primary goals is to keep clients informed, and we appreciate you watching our update. Please call us if you have any questions. We're thankful for the opportunity to assist you with your financial needs. And remember, at our firm, clients come first, and your health and well-being is our highest priority. So until next time, have a great spring.